saying that that just happened coincidentally. That they just happened to want to drop in, even though your father had connections with Alameda as a client in the Bahamas, and had the ability to bring Gemini on to the board of directors because of how well he was tied into the crypto community.
Well, you have to realize that, for Jean and any investment he ever makes, you can always draw these kind of conclusions, right? It's always going to be possible to do this. In terms of the naming process, we had a name Genome before that. We were going through multiple names. It was an IP process. We were trying to figure out which names are available, which names are not available before we landed on this. The timing of when the investment came versus the name change, definitely coincidental. We were working hard to try to find that name while separately the investment was being worked on. So yeah, unfortunately, all that is a coincidence, that timing, and I don't think a very significant one either.
It takes the trademark process actually isn't pretty easy. It actually takes quite a while to get a trademark fully filed, as I'm sure you're aware.
Yes. Yes.
So you're telling me that the U.S. government happened to drop the trademark approval at the exact same time that Alameda happened 6 days later to say yes on that investment?
Well, we filed for the trademark. It hasn't been approved yet.
So you filed for the trademark, and Alameda came in before it was even approved. Within those 6 days, that makes it even less believable. What are you talking about?
So when we first started talking to Alameda, that was in late 2021. We didn't even have that name there. When we first pitched Alameda, we were under the name Genome Bank at the time. We were still trying to nail the name, and the reason why Genome Bank we didn't go for is because American audience couldn't pronounce genome. It was being pronounced Genome.
So you were in discussions then. So then you were in discussions with Alameda for quite a while then before this investment actually came in. But yet you're saying that the timing of when they actually finally decided to write that check was still a coincidence?
The timing of the check and the name change?
Yes.
The timing of the check and the name change is a coincidence, yes. We were going through that process completely separately and in parallel, and there's no connection and no real benefit really for that check coming in and having that name change put at that point, right? And
okay. Yeah, and how were you able to get connected to Alameda originally?
Jean was being in contact with them here, where their headquarters are near the offices, and we had an opportunity to go in and pitch them.
So you're saying that Jean went to one of his well-standing clients from Deltec and pitched them an idea for a different bank in Washington State, and you don't think that is going to draw the eye of regulators?
Well, the regulators are fully abreast of the transaction the whole time, right? And it's an injection of capital. There's no board seat there. There's no control. It's capital being injected into a project that's very, very well siloed and segregated from any offshore financial institution.
Yes, but if it was siloed as much as you just say, then Jean wouldn't have had so much easy access to Alameda just to walk right over and say hi. You're friends of mine. What about this new venture we have?
No, what I mean is the siloing of the Moonstone Bank with the financial institutions that are offshore.
I'm talking about corporate governance. So where is the line drawn between the corporate governance of FBH and Deltec as far as Jean being the share of both? And then somehow being able to get a hold of Alameda, who he's been a client with for, you said you can't say how many years, but it's been much longer than before this Moonstone acquisition happened. So, how did that function?
Can you let me highlight the regulations that are really strictly in place around parallel banking organizations?
No. I'd like you to answer my question on how. Please don't beat around the bush. I'd like you to answer my question here for the crypto community and the audience that's here. Exactly how your father, who had a long-standing client relationship with Alameda, was able to convince them to come into this bank in Farmington, Washington, the 26th smallest bank in the United States at the time.
So, first of all, at the time, there was more capital injected. He invested. He funded it to a greater place. We had a long business plans in place. He managed to secure the meeting we had with them to pitch them on this new digital banking model. I mean, that's a pretty straightforward, standard path. Open doors.
But you don't have any digital banking model. You don't have a lick of evidence that shows that Moonstone has any capacity to do anything on the digital level. If I was to go to Moonstone Bank right now, and I actually ask everyone that's listening to do this, go to moonstonebank.com. And see if you can sign up for an online bank account at Moonstone. You cannot. You cannot directly sign up for an online account there. What you get instead is a customer ID that you then have to email them with. That is the least technologically advanced bank I've ever seen. And you're telling me that Alameda came in with an $11.5 million investment into that because you're the digital frontier. Please explain a little bit more why that makes sense.
So we're building all the tech in-house, right? We're building a face-by-face approach
I
completely
know
in-house for the
people that have
platform.
already built. Stop right there. I know people that have built within 2 months DeFi applications that could do way more than your website's doing. So it has nothing to do with the amount of time that it takes to build. Why isn't there any capacity for me to sign up right now as an online person into Moonstone Bank and get a credit card, a debit card, and everything else that anyone in the digital asset sphere would consider normal as a base standard at any bank?
Chad, I think you have to be fair to me that for a regulated institution, there's a lot more hurdles we've got to go through to release new products and services on a digital side. So, for example, we can have an online platform today that can do payments, for example, but digital online onboarding, for example, is another process we've got to go through and get vetted and get
Then how
approved.
is
So,
Robinhood and Coinbase and Crypto.com able to create cards and partnerships with Visa well before you were able to?
well, these are companies that have been around for a lot longer in
And
different licenses as
how
well.
long you said Farmington's been around since the 1800s, correct? That's actually longer than either of those institutions.
No, no, correct. But this was a completely different model. The
No,
acquisition
your
was
argument just
done
fell
very
apart.
recently.
No, your argument just fell apart. You said that it's because you're such a young bank. You're not a young bank. The president of your bank has been there for over 25 years, as you said yourself.
No, I hear you, but the business plan that we're talking about now has nothing to do with the last 100 years. It's a new acquisition to a new business model that was just done. That's what's being launched today. There was no
But
digital
under the same
fintech
leadership,
plan for 100
it's still the
years.
same president, is it not?
The president of the branch, correct, but we have a new CEO, and for Moonstone Bank, the whole new management is overseeing this new strategy of Moonstone Bank. Our president of the
And
branch is still
speaking of
running
that,
the
that
branch.
actually brings me to another question. The CEO of Moonstone, who is the current CEO?
Gary Reaver is our
And why
CEO.
was that just changed on your website a couple days ago?
We just updated because we had a former CEO, Ron Oliveira, who left a few months ago, and we just updated the website a couple days ago to reflect the change.
Okay, but then why did Ron Oliveira also show on his LinkedIn he ended his role in August, according to his LinkedIn? Does that mean that Ron Oliveira took over the CEO role in August?
In August of 2021.
I'm asking you what timeline. Why are you asking me?
Just clarifying what you're seeing on the LinkedIn. So Ron joined in early of this year, around January of this year, and left in about August of this year.
Okay, and it took you 3 months to update that on your website.
Unfortunately, it did.
Okay, interesting. Okay, and so I'm just lost on a lot of the questions here. So the biggest thing where I seem to be missing is where is the piece of this puzzle that makes sense for anyone to be coming in with $11.5 million investment into this bank just because it had the idea. All you've sold me on so far is that your bank has the idea to become a digital bank. It has the idea. It has the vision. It has the mission set to want to get there, but it doesn't have the background for it. It doesn't have any fintech leaders. It doesn't have anyone who's led any sort of operation like that before. Period. Inside of it, the closest thing that you have is Gemini's COO, who's on your board of directors, but he's not listed in anywhere in the executive teams. So he's not making any of the daily operations. And if I was looking at this from an investment perspective, I would be very much questioning why. Why would I be coming into this? So, in what way does this not raise red flags inside of your team that FTX was so willing to come in with such a massive investment up against the cash flow? And in what way was your cash flow possibly future forecasting that you were going to have massive increases so far that it would support that valuation and support them coming in to invest in this bank?
So there's twofold things for the bank. One obviously is the tech, being tech first, having these APIs to support these fintech companies, which I've spoke of before. And the whole other part, though, is the risk and compliance and the procedures and policies and all that has to be put in place. There's a ton of work there that goes on behind the scenes that needs to be done for all these things to launch. And when we are at that point in that pitch, we had our technology plan. We had the vendors, the build plans already in place. We had our policies, we had our procedures. We're going through that whole process already that was done, buttoned up, going through our enterprise risk committee and approved at that level. So when we're at this stage to raise capital, the whole roadmap to launch these kind of services to the fintechs was already there. And once you launch this to these fintechs, there's a ton of demand that's going to come because there's so much demand out there in the US with only maybe 12 banks in the
So
US, I
was your
think, that are
goal? So was your goal only to be a bank that held money and assets for actual fintech providers?
to hold deposit dollars for digital asset companies, cannabis, hemp related companies, fintech providers. It could be individuals as well that want to be able to transact with the
Okay, so
fintechs that they use.
how would that make you any different than any other bank?
Well, focusing on these underserved industries. I mean, the
These aren't
the
underserved
U.S. banks
industries right
today.
now. JP Morgan and lots of other massive banks are already serving these industries. So please explain to
No,
me
I don't think
why
that's
your
correct.
bank would be the one that is worth investing in.
If well, hemp cannabis is definitely underserved, right? And it's a state by state cadence. In the digital asset, it's getting much better. There's a lot of regulatory frameworks everywhere for it, but it's definitely still underserved. If
And
you
you
look, I
weren't.
think there's
I
probably
mean, we could skip over the cannabis side. You weren't invested in by a massive weed enterprise. You were invested in by a massive crypto side.
digital
So let's
asset.
focus
Yeah.
on that. You said it yourself. There was no one else other than Alameda that came in to invest. That they're the sole investor in this. So, which also refutes what you had said earlier on. You're like, oh yes, there were multiple other people that came through. They were interested. They threw some money in. Apparently not. So the question then is, where is it on the crypto side that makes you any different than any other bank out there that's already serving the crypto assets? So it would make you at all interesting to come into with that level of evaluation.
Sorry, earlier I said there was only one investor, and that was Alameda. I didn't say there was multiple investors that came in.
No,
But
earlier before that, if we roll back, you had said that you had been in talks with other people, that there were some other investors, and that this this wasn't just you focusing on FTX. But FTX is the only one that came through. FTX is the only one that invested. We only have them thinking that your bank was worth this much. So. And they're now known for rather making some pretty bad calls, it appears. So the question is, in what way is your bank different than any other digital asset providing bank? In fact, considering the fact that there's no way for me to even open an online bank account with you at all, I'd already say that there's massive differences in the negative. But what makes you more appealing and attractive than coming into a bank that has more people, more reach, and is actually deeper involved in the crypto industry already?
because getting into those banks is not an easy or smooth process, or the process it is for other industries. Today, if you're onboarding in those banks, you're in for a couple month process, right? It's going to take a long time to get in there, which means that there's a lot more demand than there are banks that are
So it's an
supporting these industries.
easier way to get around the regulatory framework. Is essentially what your answer is, which is what's being alluded to.
Well, so there's just not enough. There's not enough compliance officers and banks to take in the amount of digital asset businesses that need bank accounts today. So in the end, you're going to need more banks. You're going to need more compliance officers. You need more people that are trying to solve for this problem.
So you're saying it's because of a lack of compliance officers at other banks is why FTX decided to invest specifically in you.
No, I'm saying in general, there's a hole in the market for digital asset companies, and that's what I mean by they're underserved. There's not enough banks who are supporting the digital asset space today, and
Okay,
that's one of
but
many reasons I
you're
think
also not
to
supporting the
invest.
digital asset space. You're also not supporting it yet, and you have no ability to. And what you're saying is what you would have
Sorry,
is
let me
essentially
clarify the
just a
digital
bank.
asset
Let me just
space,
to clarify,
Chet.
please don't cut to me. So just to clarify here, what you're saying is that your bank, which is just a hometown bank, essentially now that has a national owner, um, would store fiat currencies for fintech providers, and thereby calling itself somehow on the front of the digital frontier, even though that's already being done at hundreds of banks around the country.
So we're supporting the fiat of digital asset businesses. They still often pay payroll in dollars. They still often do transactions in dollars. That's what we're supporting. So the inability to support digital assets themselves, custody digital assets, that's a different thing. We're here to support the fiat of digital asset industry businesses.
And in what way does that like make you actually focus on digital assets? Your target industry is digital assets, not, you didn't say, for instance, when you spoke to Protos, that it was a target industry of fiat currencies involved with digital assets.
the target industries are the sectors, right? Digital asset sector, hemp cannabis sector. Just like in hemp cannabis, we're banking those businesses. We're not engaging in the hemp cannabis actual trade. Same thing, digital assets. We're banking their businesses. We're not actually custody those digital assets.
So
Something
you
that
would
we'd love
just
to do in the
be
future, but
you would just be holding their cash, and that's the only thing that you'd be doing, period, ever in the future, was holding the cash for digital asset companies.
No, as I mentioned before, we'd love to be able to go through the custody. We're going through the application process. We're going through the digital asset custodial services
But I'm specifically asking, when
application.
you went through the pitch to Alameda, what did you pitch to them?
Well, we pitched them our existing powers, what we can do today, what we can do tomorrow with trust powers application, what we can do with digital asset powers. So we pitched them the whole roadmap of this is where we are today, this is where we think we can go. This are the problems that we're solving in the industry. This is the massive gap in banking in the U.S. for digital asset businesses. This is what we think we can solve.
And who did you pitch at Alameda?
It was there's a team of their legal team that was there, and we had
You pitched to the legal team?
Yeah, we had their legal team that was there for the pitch, and we had forgetting the name of the is it the venture fund? That was the other one that was there. So there was two, and then Alameda ended up taking the investment.
But who specifically at Alameda did you pitch to?
At the time of the meeting, we had I believe it was John Trevor, John Ryan, who's the current CEO, general counsel, and John Dan Freeberg.
And what were their positions at the time?
The time, it was everyone was in the legal and regulatory department.
So you didn't meet with anyone from the actual venture firm that should be vetting this project. You just met with people from the legal team to vet it, to pitch the project to them.
No, we had the venture fund that was there. With some of their
who from the venture fund?
There was a good 15 people there, so it was a very large panel that was interviewing and due diligence on the business plan.
Who was the highest ranking person involved in that Jean spoke with at Alameda in reference to this bank?
I believe it must have been their general counsel at the time.
Dan Freeberg.
General counsel and must have been their highest ranking person there.
Okay, so Jean was able to remove any and all conflicts of interest that he had between having Alameda already as a client at Deltec and then bringing Alameda into this one-off opportunity that no one else jumped into.
Hey, check your DM real quick from Mario. That's all I had. Thanks.
Oh, good. Okay. Yeah, go ahead. So go ahead.
Sorry, can you say that again, Chad?
Yes.
Go ahead.
Mario, you have to re-ask the question because I lost it.
What was the question again? I can't remember the question, Chet.
Damn it, Chet. So yes, the question essentially is, was the ability here for Jean to be able to separate his conflict of interest entirely between Deltec and Alameda's relationship, and then bringing Alameda into FBH, considering you were speaking to Dan Freeberg, one of the highest ranking people over at Alameda in this conversation.
Yeah, so that's a U.S. side regulation thing to avoid parallel banking organizations. So there's strict commitments that you go into to ensure there's no kind of transactions between the U.S. financial institution and an offshore financial institution that has common ownership. So it's very well known, right, that common ownership, and regulators get ahead of that with the commitments to ensure there's no transaction between the two. So the U.S. business model has to execute, on its own legs with its own silo.
Yes, but my question is more in the reference of how was Jean able to separate his conflict of interest, considering that this technically benefited him, and they were already partners with Alameda. And how was that?
Well, I wouldn't represent they were partners with Alameda. I'm not making a representation of partners with Alameda. Jean's just a passive shareholder at the Moonstone Bank side, right? He's active on the Deltec side. He's just a shareholder.
He's not just a passive shareholder of Moonstone. No. I'm not going to let you frame it that way. I'm sorry. Jean, your father, is the chairman of FBH, which owns Moonstone. So why do you keep representing him as a shareholder?
Well, he's a shareholder and board member, but
He's a
that's not an
chairman. That's bigger than just a board member. I'm sure you're aware of that.
Right, right, but that's not a management management role, and we have another chair of the bank itself.
It's an administratively directive role by banks that would require that he's following a lot of different procedures, and he has a lot of oversight of the bank at that point.
Right, absolutely, and that's what's ensures that there's no transaction between the foreign owned financial institutions, right? So that there's
those
strict commitments that he has to make.
How is that insured when he's able to just walk, as you said, right over to Alameda easily, which I don't think most people in the world could do, and just ask them for this? They looked into it. You were in between with Dan Freeberg, and he jumps into it. How is there a real separation there?
Because every single transaction was seen, money coming in, out of the bank, any kind of transaction, who's the transaction they're from, that's all seen, monitored by management, monitored by regulators. So it doesn't matter
but it being monitored by regulators doesn't. That's how we got to knowing these facts. That's how we know that Alameda threw in 11.5 million. But the question is, it seems awfully hard to comprehend how Jean wouldn't have been able to basically have favoritism in this situation because of his already well-known and long-standing relationship with both Alameda and Tether was something that Alameda was using significantly in its operations.
So you're saying favoritism in the ability to raise capital?
Yes, absolutely.
Well, I think when you're raising capital, when you investment bank, the investment bank is going to a network of people that they know they've built relationships with, and they're trying to get you the best access to be able to raise capital. There's always an element of that relationship and being able to pitch the story to these people directly that you know. There's always that element in raising capital.
Okay, so Jean was able to basically use his influence with FTX and Alameda to be able to push them to move the needle on this more, is your answer.
He was able to get us a pitch our business plan for which they did their due diligence on and invested in.
Okay, and what due diligence was performed?
Diligence done, it went through with the shareholder process, regulatory process, looking at the financials, looking at the business plan, looking at the vendors we're looking at selecting, the team we're hiring, the vision of what we're going to build out, what we do with our today powers, what we can do with trust powers, what we can do with digital asset powers one day in the future. It's this whole business plan that we've been pitching, to raise capital. It's the same story that I've been telling you earlier. There was this whole digital-based bank.
And you said you pitched them on your current operations as well, right? You said you pitched them on what your current capacity was. What was that pitch? What was your current operations and capacity that you pitched them?
So with the new management we've been hiring, be able to raise capital that increases our tier one capital, allows us to take on more deposits. There's a lot of fee revenue that can be generated with the banking service strategy. In the climate like now, having high deposits gives you an ability to earn interest income just by holding deposits. So there's a clear roadmap to revenue by having a model that has a lot of utility internally, and you look similar to like a Send or a Silvergate, where you have that utility of easy, fast payments between each other and be able to send and receive payments reliably. That creates stickiness of deposits, and deposits is what generates the revenue.
So you're telling me that when all that you presented to them was the fact that you could create revenue?
Well, all the elements that would lead to revenue generation in the end.
Okay, and those elements were what?
Well, as I mentioned, the whole infrastructure that was going to be able to do B2B.
No, I was going to be able to. Hold on a second. I asked you a specific question here. You said you pitched to them your current operations and what you could do. I'm splitting the two out because I think this is very critical. What were your current operations in the digital asset sphere that you pitched to them that you were already capable of doing when you ran the pitch?
Yeah, Chad, I'm sorry not able to be clear here. We're able to bank the fiat of digital asset businesses. We'll be able to take on deposits, have reliable payments, have capacity to onboard digital asset businesses where there is a massive backlog in the U.S. Banks for banking digital asset businesses. Left and right, people are looking for banking to be able to make payments, to be able to pay salaries, to be able to deposit the cash they're raising in their capital raises. And there's a hole in that market. I've not
experienced any of these issues you're talking about, so I'm very confused as to what you're talking. I've been in the crypto sphere since 2012. So please explain to me what issues you're talking about that you're solving. You're going to have to expound more on that.
Chet, digital asset businesses have struggled to open bank accounts at banks for a long time. And it's getting better today, but that's been a major issue
So after the
for
FTX
years.
blow up,
I
after
will. I
after
will.
everything's gone south. Hold on one second. Hold on one second. I have
Sorry.
a
Go
question
ahead.
here. So after the FTX blow up, and after everything that's gone south, you're saying that it's better if people can try to skirt past these regulations as quick as possible. Like, what is the point there?
There's no skirting past regulations. There's the standard KYC and onboarding process. You vet a customer, you see if they're
yes, but you said. But hold on one second. Let me just reframe the question here a little bit so you
to be able to
understand.
onboard this customer. There's not enough banks in the US doing that today.
Let me frame the question a little bit so you understand where I'm coming from here. So you're saying that the infrastructure itself. Okay, so, Mario, go ahead with your question. I'll come back.
No, it's not a question. It's more first, Janvier, you're getting a lot of praise in the audience, so your transparency is being highly appreciated. And Chet, you're a beast with the questioning. I forgot my question, man. I'm just so glued into this. Go ahead, guys. The audience is enjoying this like crazy, so much respect to both of you. Go ahead, Chet.
Yes. So just, I mean, in the current operations, the point that you're making is that what you had the capacity for was to set up this digital infrastructure that no one has access to, but yet there are other entities that are able
Oh,
to
I
go
remembered.
in
Sorry,
and
I
get
remembered
accounts
what I
at
wanted.
banks.
I wanted to add just one thing. Sorry, just very quickly, and I'll let you continue. What I wanted to add earlier is that Janvier, what he said, digital asset companies struggling to open bank accounts. We're experiencing that as well. So just wanted to kind of add on to that point. Just agreeing with Janvier. But go ahead, bro.
Well, yes, but my question here is obviously, yeah, it might be a little bit difficult for some digital asset markets to get into the banking infrastructure. It's especially hard for them to get a banking license and things of that nature. But after the FTX saga, I think we would all agree that more regulation might have been needed, and actually more regulatory scrutiny was necessary, not less. So, like, my question is, if you're saying that the whole point of this is it's just to open up the door easier for the digital asset landscape to access the banking industry, considering it's so hard for them to do it because of compliance issues, isn't that kind of going against the grain of what everyone's current consensus is of the issues with FTX right now?
Saying it's opening the doors easier is a misrepresentation. I'm saying there's not enough banks that are willing to open digital accounts for digital asset businesses today. And so by having another bank that's trying to fill that problem, then you have just more banks that are willing to meet the demands of this this huge amount of digital asset businesses that are backlogged today. So it's not making it easier in any way. I totally agree. There should be high level of scrutiny, and we need to make the industry more well regulated, have better oversight. And that's what the bank's intention is to do. But to do this in a more scalable manner, have more efficient onboarding. Things like you mentioned, we don't have digital onboarding live yet. This is something we've been working on for a long time, so we want to get it done right. If you have the right digital onboarding with the right checks that happen automatically as you onboard, then you can have a scalable solution to start eliminating this backlog that a lot of these banks are facing right now. So we're part of that solution, and it's not trying to make anything easier.
You don't think it's
more efficient.
You don't think it's odd at all that a massive trading arm like Alameda would come in to a bank with zero online banking presence for its future online banking presence?
Because there's a clear plan to roll that all out.
I could have a plan also, to go to Mars, and I could roll that out as well. Like that doesn't make it valuable. We talk to projects all the time that have plans, and they don't end up actually being able to pull through on them, and they fail. And this is seen throughout the venture capital space, it's seen throughout the investment space. So the fact that you just had an idea isn't enough typically. And on our own due diligence process, we'd look, okay, well, do you also have the fintech background? Well, you don't have that either. So if you don't have the fintech background, or you don't have the technology for it, what is there to invest in?
But Chet, for banking, what an online banking is a portal you go into to see your account balances, to make payments, to see your transaction history, to download banking statements. I mean, this is something that's very clear to show how we're going to deliver it and make sure that it's there efficiently for our customers. The biggest thing we're solving is being able to actually onboard the industry that, again, is underserved and is a huge backlog. And then once they are onboarded, don't have a surprise from risk and compliance later because they didn't actually know it was a crypto company and that they get their account shut. And then when they're in it, they have an easy self-service way to make their basic payments, see their balances, get their statements. So it's their basic banking needs they need to operate the fiat side of their business. That's what.
But if I was a customer at Farmington right now, I don't even have access to those basic banking needs that you're talking about.
No,
What, correct?
you do have those things. You do have those things. If you go
Okay,
right, you
where
don't
they
have the
where
digital.
which website can I access these accounts at?
So if you go to the well, if you first, like, if you contacted any of us directly, we go through the onboarding process with you. But on the website, the contact us form, it goes directly to our sales team. Our sales team qualifies there, brings in the onboarding team, and we start onboarding the account. And that's what we're doing right now in our manual cadence until we launch our digital onboarding.
Yes, but then my point is correct then, that you currently don't have that sort of system that you're speaking of, even for your current clients.
Correct. We're still in the sprint developing the digital onboarding, but the online banking is available for our current customers. So the ability to make payments, see your balances, statements, transaction history. Once you're a customer, you can log in. You have that portal access to manage your business.
So, well, but you're talking about all these great things that it can do and achieve, but the only way it could have achieved this was with the cash inflection that happened from Alameda. There wasn't any other massive inflections that really happened in the capital side of the bank or an investment, and they're the only one who invested in the seed round. Now that all of their money is most likely to be pulled back, what happens now?
Well, it's not all these great things. It's pretty simple products and services here that are supposed to just work efficiently because we're catering to digital asset space. So these things are things that you're focusing on the actual online banking development. That's not the part to focus on. The part to focus on is that we're specializing in the digital asset industry, the industry that's underserved, and making sure we're catering these products and services, which may seem simple, to their needs. That's the key thing. And those needs are basic fiat banking needs. Those are the ones that have issue. Everything on the digital asset world that they're doing, there's plenty of development there, and that's a separate thing. The place where there's the gap is on the fiat banking. That's where there's the gap that we're solving for.
That's governed by the Federal Reserve, though. The Federal Reserve is already looking to how it wants banks to manage cryptocurrencies. There's going to be, of course, regulations that come out on that matter as we go through the next probably 2 years, as I'm sure you're very well aware. So this is an industry-wide thing that's being solved. It's not, like Moonstone itself has jumped in here with, like, what I'm failing to see is the innovation. What is it that Moonstone has innovated in that made it worth $115 million? Where is the innovation in the concept?
So what you're questioning, Chet, what you're concerned and what you're trying to get to is, why did Alameda invest? Because you just cannot see a reason they would invest. Is that what
I wouldn't invest. After this conversation, I would invest. And so my question is, where is the innovation? Where is the innovation that would cause a massive trading house like Alameda that Jean can just walk over to and talk to their general counsel? Where is the innovation in Moonstone that makes it ahead of the game of anyone else in the space? That's the question.
So, and your concern, Janvier, before you answer, and then
Yep.
and then your concern, Chet, is that there is other reasons that Alameda invested in Moonstone that maybe even Moonstone is not aware of, or am I putting words in your
Very
mouth?
much likely, or not. Who knows? But the line of answers here just don't seem to add up.
Can I just
What do you
add
think,
something
Janvier?
to that? I think it would be quite interesting to hear about what, the future, what you'd like to do. Because I think the questioning has been absolutely phenomenal. Chad, and remind me never to piss you off. But I think it'd be quite interesting to hear maybe what you'd like to do, what you're hoping to do, as well as what Mario's mentioned about that.
Yeah,
Because
so we'll get yes. I wanna kind of also give Janvier the opportunity to talk about Moonstone as well for everyone else in the crypto community listening, because I think you coming on stage, you deserve to talk about what you do and get awareness towards it. But yeah, so before we get to that, Janvier, if you could, yeah, just address that concern. I think it's a fair concern, and I think there's a similar line of questioning to every entity involved in FTX, from Kevin O'Leary to every single exchange to Binance. To Elon Musk came on the show and talked about his interaction with Sam, and obviously there's more questions that came up in recent days. So the question about why, like, do you see where Chet is coming from in terms of a logical reason why Alameda invested, and do you think there's a possibility they invested for reasons other than just pure business purposes that you may not be even aware of? What do you think, Janvier?
So I don't know the rationale, but I think there's there's reason investing in regulated financial institutions. I believe that regulated financial institutions are kind of the final frontier for banking and supporting digital assets in the right way, going forward for the future. I think there's a lot of things in place and regulation for consumer protection, the likes that that go a long way. To make sure we get broad-based adoption eventually, and that's just a commentary on in general the regulatory space. As for our evaluation, I'd say we're an early mover here. Not wouldn't say first mover in the space, but when I say that there's a long backlog for digital asset businesses for banks at the moment, that's what I mean. It's still an early mover. We're trying to still solve a gap that exists in that market. And I think when you look at that, if you can really figure out smooth digital onboarding, you really are going to figure out how to squash down that onboarding time, and that gives you to grow the customer base, grow the deposit base. And the second thing, which is a bigger topic, is the sponsored banking, the banking as a service. I think that's something that has not really been solved from a tech perspective. There's a lot of middleware providers that are doing a great job out there that are sitting between the fintech and the bank. And these are absolutely players that banks want to partners and work with, because they act as a first line of defense, ensuring the fintechs are compliant and ensuring the fintech stocks are all in order, and they are as a first line defense for that bank. So there's some things that are solved there, but it's very still very disjointed, and I think there's a lot of room to solve for banking service, meaning banking for institutions that have their own customers. So I think if you really solve for digital onboarding and the banking service aspect, there's a ton of legs there. As a first mover targeting these underserved industries.
Do you think there could be other reasons, more nefarious reasons that, and this is more speculation, obviously not facts and nothing but could there be other reasons that, again, not that you're involved in that in any way, but Alameda had other things in mind from that investment? Because these are the questions that were being asked over the last few days.
No, I understand, but just based on the nature of the way that we approached and pitched, our model, I would say no. They were looking at our model, hearing the way we want to expand, investing based on that. There was no backwards request or them looking to us saying, hey, can you do X, Y, and Z? It was listening to our business model, investing in that.
Okay, and back to my one question that I had again. Can anyone hear me? I changed my AirPods. I have to make
Your
sure.
your mic is shit.
Okay, let me
Your
change back out of my AirPods and hopefully it'll work better. But give me a second here. Okay, so what is the innovation? What is the main innovation about Moonstone, about Farmington State Bank, about its operations? What has it done? What has it achieved that makes it actually innovative and actually be doing something that no one else is doing in the space right now, which would be, the reason why someone would invest?
And and then after this question, I also want to ask about the Deltek and Tether relationship, that a lot of questions are being asked by the press. So that could be a good next question, Chet. But go ahead, Jean-Pierre.
Yeah, sure. And I feel like I'm trying to address the value that obviously I believe in. And again, that you're talking about a main innovation. I feel like a lot of these questions are kind of looking at what's a new big DeFi project, or what's a new big tech startup. What's their innovation that no one else is doing? In our situation here as a bank, we're trying to solve for that the fact that there's a big gap in the market for banking digital asset businesses, and then. Well, I'll stick on the fiat side for now. So on the fiat side, there's this big gap, this big backlog. We're trying to solve that initial problem first, and the innovations that we feel can solve this are a digital onboarding with the automated checks that allow us to scale and have basically more onboardings per compliance officer. That's the goal there. And then once we have some of these businesses, the innovations we want to do on banking as a service. That's something that is a way of delivering all of our basic banking service products, payments, cards, deposit accounts through to financial institutions in a safe and sound manner. And then, one day in the future, we really think that the final frontier for digital asset custody should be the regulated institutions like banks to safeguard digital assets. Something that I believe in. I think people can always have the option to
banking as a
self-custody
is something that's been around for quite a long time, though, right? I mean, that's not an innovation necessarily.
Yes, but banking as a service in the original traditional form is just an agreement, right? You say I want to have a pooled account with the fintech's money and all their customer money in one pooled account. We have an agreement, and we loosely, have reliance on their procedures and policies, their compliance, etc. It's a way that's been done contractually, and it's only recently that you have a lot of these middleware players that are coming in to say, okay, let's give independent ledgers to each of the fintech's actual customers, so we can track their name to their account, we can track their movements, their balances. We know who they're sending or receiving money to. There's a lot of transparency is being created around that kind of account structure today that did not exist before. So, banking service in its original term, it's existed for a long term, for a
I'll
long
go.
time.
So crypto. Just quickly check crypto B513 regular on the show. You got a couple of questions for Janvier? Go ahead, bro. You're muted, crypto B.
Crypto
perfect.
B513.
I'm here.
Hey,
Sorry
bro.
about that. Yeah. A couple of questions that I have here. Javier,
Do you want to get closer? Get closer to the mic, man.
Yeah, let me get. I'm on a Bluetooth here. Let me take that off.
Yeah, please do. Thanks, bro. Crypto B, you ready?
Yes, I'm here.
Perfect, man.
Yeah.
Perfect.
Sorry,
Go ahead.
sorry about that. Javier, did you have any direct contact with SBF?
I did not know.
Okay. Did anybody on your board or any of your chair persons have any?
Not that I know of.
Okay. Was any of the 11.5 that was invested